Before passage of the Credit Card Act of 2009, Pew's research showed that 100% of cards from the largest banks included practices that the Federal Reserve called unfair or deceptive. Those practices have largely gone away, and that's good news for consumers. Other good news is over-limit fees are now much less common, and that's something that Pew's Safe Credit Card standards have called for. And also, there's been no rise in new types of fees, like annual fees. Well, we have seen a lot of good news. Some challenges remain. Cash advance fees have gone up across the board, both for banks and credit unions. Also, penalty interest rate increases, interest rates that will go up in response to account violations, are still very prevalent among the credit cards that we researched. And we've seen a new trend. Some issuers have stopped actually disclosing what the penalty interest rate is, even though they still reserve the right to charge them. When the penalty interest rate is not disclosed, it leaves consumers vulnerable and in the dark, and it puts their financial security at risk. What needs to happen is that the Federal Reserve needs to make sure that credit card issuers disclose clearly what the penalty interest rate is, when it will apply, and how long it will apply. These are long-standing banking regulations. The Federal Reserve also needs to clarify that once a bank discloses its penalty rate, they stand by that, and they don't try to charge a rate that's higher than that later on.